Hello, welcome to Bridge to Bharath. My name is Shivabalanarayanan. Almost everyone in India pays taxes. Many of us pay income tax, companies pay corporate tax, but even if you have never filed an income tax return, you probably still pay thousands of rupees in taxes every month. Every time you buy something from a shop, you pay tax. Every liter of petrol you fill, nearly half of the price is tax. Every movie ticket, every phone recharge, every Uber ride, tax, tax, tax. You are a taxpayer. Every Indian is. Now we complain about taxes, we joke about where the money goes, but very few of us actually know. And that's the mystery we're going to solve today. So, where does all this tax money go? Does it vanish into New Delhi? Does your state, Tamil Nadu, Gujarat, Maharashtra, Bihar, do they get a share? Last year, the Indian government collected about 38 lakh crore in taxes. To put that in perspective, that's about 27,000 rupees per person. In other words, on an average, every Indian, man, woman, child, even counting newborns, paid 27,000 rupees to the government last year and said, "Here, take care of India with this money." Which government gets these taxes? When India's founders wrote the constitution, they split up the tax job between the central government in New Delhi and the state governments. The center got the heavyweight taxes that fill the national coffers. Income tax from salaries, corporate tax from companies, customs duties on imports, excise on petrol and tobacco. The states got the local taxes, property registration, electricity duty, motor vehicle and liquor taxes. The states get to keep the taxes they collect. Because the center collects 4 to 5 times more than the states, and the states have to run schools, hospitals, roads, and the police forces, they need more taxes than just the local taxes can provide. So the constitution mandated that the center must share a portion of what it collects with the states. How? Article 280 of the Constitution created the Finance Commission, an independent body appointed every 5 years to decide how much of the center's tax money must be shared with the states. Here is how it works. The central government collects all its taxes and makes one huge pile. It doesn't matter where the money came from. Tamil Nadu, Uttar Pradesh, some states contribute more, some less. They all go to the same pile. And the Finance Commission decides two things. Number one, what percentage of that pile does the center get to keep? And what percentage goes back to the states? Number two, of the money going to the states, how much does each individual state receive? Economists call this fiscal federalism. That's a fancy term every large democracy must figure out. How to share money between national and regional governments. The US does it, Germany does it, Canada does it, every democracy does it. But India does it at a scale that's almost unmatched. 1.4 billion people, 28 states, 8 union territories. Right now, we are living under the 15th Finance Commission, which covers 2021 to 2026. After months of data crunching, they decided 41%. That means the center must distribute 41% of the huge pile of money back to the states. It can keep the remaining 59% for national responsibilities like defense, railways, highways, and nationwide welfare programs. Not every tax gets put into this pile. There are a few exceptions, but we will keep it simple for now. 41%. That was roughly 10 lakh crore rupees last year. 41% flows from Delhi back to the individual states. To give you a sense of scale, That's roughly 1/3 of the entire economy of Singapore. And here's what makes it extraordinary. This 41% is constitutionally guaranteed. The center can't simply reduce it. Every 5 years, a new finance commission reviews the number, Parliament approves it, the money flows, regardless of which party is in power. And through coalition governments, to economic crisis, through endless political change, the system has held. It's one of the quiet miracles of India's democracy. A fiscal handshake between the center and the states that has held steady for 75 years. So now we know 41% of the pile of money comes back to the states. Let's stuff all this 41% into money sacks, money bags, ready to be distributed to the states. How many bags does each state get? Who gets more? Who gets less? And why? Does it depend on population, poverty, how much a state has contributed to the pile? Here's your homework before the next episode. Think about how you would distribute the money. What would be fair? What would be good for India? Should a state with more people get more money? Should poorer states get extra help? Should states that contribute more get more back? Or should everyone get an equal share? There is no right or wrong answer here. But your answer reveals something about how you think about fairness, India's development, and what holds the country together. Drop your thoughts in the comments below and tell us how you would distribute the money back. And that's what we will explore in the next episode. How India slices the fiscal pie. By understanding how India actually shares its money and why, we get a view into how our founders thought about this problem, and you can see how your answer compares to theirs. See you in the next episode.